Good morning, everybody. Thank you so much for coming to the first live to 2020. Today is going to be a wonderful day for all the workshops that we have. Please, thank you for attending. Mute your microphone, or they're going to be muted by the host here. Question and answers at the end of the presentation. You can post your questions in the chat area anytime. For more questions, please check with the presenter after the finish at the exhibit hall, and you will be able to see the presentation in the video vault. We're gonna put that button active probably tonight or tomorrow. And please remember that these all these videos is being recorded. So everybody, please, if you wanna unmask yourself or unmute, that would be great. So with that, please take attention to our first seminar presenter. It's a wonderful workshop that we have. Buy your home with low or no money down. It's right now the perfect time. Every time is the perfect time to buy a property and start. So Catherine Madruger with the Arlington Community Federal Credit Union, please take it away.
Good morning, everyone. I'm going to share my screen. Just give me one moment. Okay, I am unable to share my screen at the moment.
Go ahead.
Here we go. Okay, sorry. Yes. Okay, good morning, everyone, and welcome. Thank you for joining us today. I'm going to talk a little bit about how to purchase a home with either no down payment or very little down payment. I first want to talk a little bit about Arlington Community Federal Credit Union. I don't know if you guys are members or not, or if you're aware of our credit union. We are local here to the Arlington area. We are a full service financial institution. We offer checking, savings, car loans, personal loans, home loans. And then you have to either live, work, worship, go to school in Arlington County, Fairfax County, the city of Alexandria, or the city of Falls Church to be able to join. So just a little bit about our credit union. So what I want to do starting off today is talk a little bit about the parts of mortgage financing. What we want to do is just go over a couple key phrases. The first thing I want to make sure that everyone understands is that when we're talking about the purchase price of a home, we are talking about the sales price of the home, and that's you're going to end up financing the sales price through the lender. It's not your loan amount, but it's the amount that the seller wants to sell the property for. Typically, when you're talking about mortgage financing, lenders are looking for a down payment. We're going to talk today about programs that allow to put very little or no down payment down. But a down payment is the part of the purchase price that you pay outside of your mortgage loan. Really, the down payment shows lenders that you're capable of saving money to come up with a little bit of that down payment and that you're serious about your transaction. We've all heard that a traditional down payment is 20%. No one is able to save 20% of a purchase price of a home these days, so which is why we have some of these other programs that we're going to talk about. Keep in mind that most lenders will also allow part of your down payment to be borrowed, so you can get a gift, but you need to make sure you're checking with your loan officer on that to make sure you understand exactly the amount of the gift you would be able to get. The next term I want to talk about is your closing costs. So closing costs are different from your down payment. So even when you're talking about a loan that allows for no down payment, you still have closing costs associated with the loan. And closing costs are typically around 3 to 4% of the purchase price of the loan. With that, there's about 5 main types of closing costs. There's title and recording fees. So we have to record your deed at the county clerk's office. There's transfer taxes that go with that go to the county. There's always going to be prepaids and escrows, things like paying the interest from the time you get the mortgage through the end of the month. Setting up an escrow account, because the lender will typically take part of your tax and insurance payment as part of your monthly payment, so they'll pay those bills through your mortgage payment going forward. There could be mortgage insurance on your loan depending on the type that you get. Then there's also lender-related fees such as credit reports, origination fees, application fees, and then there's always going to be property-specific fees such as an appraisal, a termite inspection, things like that. So it's a really important thing to get that distinction between down payment and closing costs. Regardless of the type of financing you get for your property, you will have to pay closing costs. Then another term you'll hear a lot about is reserves. And reserves are basically the amount of money you have left over once you've bought your home and paid those closing costs. And we've got some charts and things that we'll look at and go into that a little bit more in detail. Especially at Arlington, we never want to take all of your money. There will some lenders that will do that. They will drain your 401k and they'll drain your savings accounts and your checking accounts, and then you don't have any reserves left over when you've purchased your home. We really do want to see reserves, and a lot on the lower down payment ones, lenders will want to see reserves because life happens. Very soon after moving into your home, an appliance could break. You might need to make a major repair to the home, and we want to make sure that you do have money left to continue to live your life and meet those costs. So those are just a couple of the terms we want to make sure that you have an understanding on. So for the types of financing that allow for the low and no down payment, the first one I want to talk about is a VA loan. If you are active duty military, a reservist, a veteran, or a surviving spouse, you could be eligible for a VA loan. VA loans offer 100% financing, so they will lend you that full purchase price, but you would still have to pay closing costs. It is insured through the Department of Veteran Affairs, and you have to get a certificate of eligibility from the VA. There is a funding fee of 2.3% for first-time use, but that funding fee, and it's 2.3% of the loan of your purchase price, loan amount, that can be rolled into your financing. So it's not a fee that you have to come up with the funds for. It's something that can be rolled into the financing of it. You have to have a minimum credit score of 620 to be able to qualify for a VA loan. VA loans are very competitive. They're great if you are active duty, reservist, veteran, surviving spouse, and you can qualify for one of these loans. It is a great program to get into a home. If you can't do a VA loan, there's also an FHA loan. FHA requires 3.5% down payment, and that's a required down payment on that loan. You can put down more, but that would be the minimum. It's insured by the Federal Housing Administration, and the FHA loans are really great for first-time home buyers because they are more lenient on credit blemishes. If you've had some late payments, if you've had some collections in your past or a bankruptcy, the FHA loan is the most lenient when you have had some credit issues in the past. There is mortgage insurance as well on that, and it's paid to the Federal Housing Administration. It is a 1.75 funding fee up front, and that can also be rolled into your loan amount so you don't have to finance it. So there's mortgage insurance that's paid up front and on a monthly basis going forward. So those are two great government low no down payment loans that are out there. And again, the VA loan goes up to 100%. FHA, you have to have 3.5% down. 620 is the minimum credit score on the VA loan. 580 is the minimum credit score on the FHA loan. FHA does allow you to go below 580. However, you do have to put a larger down payment down. They will require a 10% down payment if you have a credit score below 580. Okay. Then there's also a VHDA loan, which is the Virginia Housing Development Authority loan. It does allow for 100% financing of the purchase price. There is down payment assistance grants or second mortgages available to get you to that 100% financing. There are household income limits that apply to this loan, and there are purchase price limits that apply. These rates are typically higher because there's no monthly mortgage insurance like FHA or some of the conventional loans that we're going to talk about. The maximum purchase price limit on this product is $525,000. The household income limit, if you have a household of 2 people or less, the income limit is $138,000. If you have 3 or more people in your household, the income limit is $161,000. And when this program looks at income, household income, it's looking at everybody who is a part of your household, regardless of whether or not they're actually going to be on the loan to qualify. So if you have an adult child living at home who's not going to be on the mortgage, but they do have a job, they would be considered as part of that household income limit. If you are looking to purchase a home that's underneath the maximum of $525,000 and you are within the income limits, this is a great loan to get. You can take advantage of the down payment assistance through this to be able to reduce the amount of cost that you have to bring to settlement. There's lots of great information about this loan on the VHDA website. There's also on the VHDA website a list of approved lenders who offer this product. So not every lender offers a VHDA loan. So if you're interested in this product, I would encourage you to go to the website and look for a lender that does work with this product. Another type of financing is through conventional financing. We can do down payments as low as 3 or 5%. So this would just be, it's like the VHDA loan, there's the income limits and there's household limits. With the 95 and the 97 loans, there are no income limits or household limits attached to these. So the 3% in down payment is a little bit less of a down payment than the FHA loan. There is monthly mortgage insurance required on these 97 and 95% loans. However, there's no upfront funding fees, so there is a little bit less there. And of course, all these loans, you would still have to pay closing costs. The last type of financing I'm going to talk about is the Credit Union Zero Down program. We have a great program that we help a lot of people in our community purchase homes with no money down. It is a zero down program where we do offer you 100% financing of the purchase price of your home. The way we structure that loan is we give you a first trust loan at 80% of the sales price and a 20% loan or a second trust loan at 20% of the sales price. We don't have any upfront funding fees like FHA and VA, so there's no additional fees you have to pay to get that. There is no mortgage insurance required on a monthly basis, and the way we avoid that is to give you the 80% and the 20% loan. We don't do a rate increase for this product. There's no household income limits. And you still have that closing cost on every loan that we've talked about. You would have to pay those closing costs outside of the loan financing. And we do look for you to have 2 months reserves with this product. And again, we want to make sure that you have the funds available to be able to cover any unexpected costs once you do become a homeowner. So this is a really great program. Like I said, we've helped many, many people through that become homeowners with this program. It does allow you to get into your home for the least amount of funds available. Now, I know we've talked a lot about, or I've talked a lot about different types of financing. So I want to give you a little side-by-side example of what all this looks like. My next slide has a lot of numbers on it. It's going to look a little overwhelming when it pops up, but I will walk you through it. But I felt like it was really important to take some of these loan types and put them side by side so you could see what we're talking about. Okay, here's my scary slide. So on this financing example, I'm using a $300,000 sales price, and we're going to put closing costs at 3.5% or $10,500. And what I wanted to do is lay these side by side so you could see if you wanted to buy a $300,000 home, what would your financing look like if you did a VA loan, an FHA loan, you did a 3% down payment, or you used Arlington Zero Down program. So in this first column here with the VA loan, your first trust mortgage would be $300,000, which would be that 100% financing of the sales price. We talked about that VA loans have an upfront funding fee. In this case, it would be $6,900, and you do roll that into the loan amount. So you're actually going to borrow on a VA loan $306,900. There's no second trust associated with it. You're only getting one loan. There's no down payment required because you're financing 100% of the sales price. So your total cash required for this is the $10,500, which is the closing costs. So that's all the money you would need to come up with. Your monthly mortgage payment would be, this is approximate, $1,244. So that's how that VA loan kind of works out. Now, if you compare that to an FHA with the same $300,000 sales price, your first trust loan amount is only going to be $289,500 because you are putting a 3.5% down payment. FHA still requires an upfront funding fee, which again, you can roll into your loan amount. So on the FHA, you're borrowing slightly less at $294,000. There is no second trust. You have to do your down payment of $10,500. You're going to have your closing costs of $10,500, which means your total cash that you would have to purchase this home through FHA is approximately $21,000. Your monthly payment, the principal and interest portion is going to be $1,222. You'd have about $203 in mortgage insurance. So your total payment is $1,425, which is, it's almost $200 higher than the VA loan. Same house, if you're doing the 97% financing, you would actually borrow $291,000. You'd be putting a $9,000 down payment. You would still have your closing cost of the $10,500. So you have to have $19,500 cash available to purchase the home. Your monthly payment is slightly less than the FHA because you have a slightly lower loan amount, and the mortgage insurance on the 97% financing is less than on the FHA loan. So your total payment on this would be $1,323. So these three products compared to Arlington Zero Down product, we're going to lend you $240,000 on a first trust. We're going to give you a $60,000 second trust. So there's no down payment required. The total cash it's a slightly higher closing cost. It's more towards the 4% side. So you would need $12,900 to be able to get this loan. The monthly payment on the first trust is going to be $1,028. The monthly payment on the second is $188. So the total monthly payment on these two loans is $1,216. So as you can see, the Zero Down program the VA is a great program. That's the least amount of money, but if you don't happen to qualify for the VA, the Zero Down allows you to get into a $300,000 home for the least amount of money down and the lowest monthly payment. So that's why we feel really strongly about this program. It's a great help. Now, some people, they don't want to make two payments. They'd rather bring a little bit more money to the table, and they'd rather have that slightly higher mortgage payment. So the 97% is also a great product, and then FHA is also a great product if you have some credit blemishes. So that's kind of a side-by-side so you can see some actual numbers and what it would mean as far as that total cash required. Now, most of these programs, when you're looking at down payment, like I said, sometimes gifts can be allowed depending on the program. You can also get some, if you can find a seller who's willing to contribute some money towards your closing costs, you could get a seller concession to help you pay part of that closing costs. Some of these products do have limits on what those seller concessions could be. So it would be very important when you're working with your loan officer that you talk about whether or not you're getting a gift or whether or not you're going to be looking for any seller concessions. Right now, the market is extremely tight. There's not a lot of inventory right now. So the inventory, when a home does go on the market, it tends to sell very quickly. So sellers really don't have an incentive right now to assist borrowers with paying closing costs, but it's always something that you can talk about with your realtor and your loan officer. So these are just some financing examples. There's other programs out there that will help you with your down payment and your closing costs. Arlington County has some great homeownership programs. They have some great programs. I would encourage everyone to visit their website and see if they would qualify. I'm not an expert on any of these programs. I just want to give you some tools to go and look at and reach out to these individual areas if you think that their grant programs will be something that will be beneficial to you. Arlington County, like I said, has some great grant programs. VHDA, like we talked about, there are some grant programs there, and then you can also see if you're going to qualify for the purchase price and income limits. HUD has a Good Neighbor Next Door program that has some great grant programs that can help you with the down payment and closing cost assistance. And then just like Arlington has our zero down program, there are lenders out there that do have other zero down programs. So it does, it doesn't hurt to go and really do your shopping. Look at different lenders, look at what programs they have available, and see if something out there could be beneficial for you. Okay, so now I want to talk a little bit about getting organized and getting ready for the home buying process. The first thing we encourage everybody is really know your credit score. So that drives the loan products that you would be eligible for. 580 is the lowest for the FHA, 620 for the VA and the VHDA. For our zero down program, you have to have a minimum of a 680 credit score. So it's really important to know what that credit score is. There are different places you can go. You can get your free credit report from you can go online and go to, it's like freecreditreport.com and get your credit report. You can see if there's anything that's being reported incorrectly, and you can work to get that fixed. If you see your credit score is a little too low right now, you can also contact for credit counseling and help to get that raised. Start thinking about your closing costs, that 3.5% to 4% of the purchase price, and where is that money going to come from? You cannot take out a loan to pay for those closing costs, and you can't put it on a credit card. So those are two things that you really need to keep in mind. Like we talked about, it can be a gift from a relative. If you do get a gift, then there's going to be some paperwork involved with that. The lender's going to want to make sure that it is truly a gift and there's no expectation of repayment. So the person that is giving you a gift will have to complete a form letter just stating that it truly is a gift. No repayment is anticipated. And depending on the program you go with, your relative or that's giving you the gift will have to prove that they had the gift to give you. So they'll be asked to provide bank statements showing that they had the funds available. If there's seller concessions, like if the seller is going to help you with that, again, usually it's up to 3% is the maximum that a seller can contribute towards your closing costs. And that's something, again, talk with your realtor and your loan officer about. Paperwork. So getting a mortgage requires a lot of paperwork. Buying a home requires a lot of paperwork. We have a checklist on our website of the most commonly requested documents. A lender, regardless of what lender you're going to go to, they're going to want to see 30 days worth of income, so pay stubs. They're going to want to see your last 2-year tax returns. They're going to want to see 2 months worth of bank statements. If you own other properties, they'll want to see your lease agreements. There's a list. So if we were doing this in person, I would be passing these documents out so you could take a look at them, but please feel free to go to our website and take a look at our checklist for purchasing a home. The next thing is we really encourage everybody to go through the pre-approval process. You want to find out how much of a house you can buy before you go out there with a realtor. We see people that go out with realtors and they start shopping for homes and they fall in love with a home, and then it's just out of their price range, and it really can just be devastating to everybody. So we really encourage everyone to get pre-approved. What that really means, so it's really the first step in the housing hunt and the mortgage process. Let me just pull all this up. Okay. So we encourage everyone that comes to work with us to get pre-approved first. What that means is you're going to provide your credit documents. We're going to pull your credit report. We're going to ask for your pay stubs. We're going to ask for your bank statements. We're going to make sure from a credit standpoint that you really do qualify for the loan. So you have that confidence when you're going out with a realtor. You know exactly the price range that you're looking at. We can give you a pre-approval letter. You can put that in with your contracts. It makes the contract stronger because the seller knows that you're already working with a lender and they've already taken a look at all of your credit qualifications and know that you can get the home loan. Our pre-approvals are valid for 90 days. So it gives you some time to go out and house shop and, try to find that house that you really want to move into. If you don't find something within 90 days, it's really easy to update that again. We just ask for a little bit of updated information. We re-pull your credit, ask for another pay stub, and then we can get that letter updated and send you back out there again. Sorry, I'm just looking at my notes real quick. Really talking with a loan officer about your goals and how long you're going to be in the home is really an important thing to do as well. Everyone is unique. Everybody wants to go, but the thought process out there is, I just want a 30-year fixed rate loan. I don't want to deal with anything else. But if you're only going to be in the area for 3 to 5 years, maybe because of job or, you're going to be going to school, or you're getting out of school, something like that. If you know that you're only going to be in the area in the home for 3 to 5 years, there could be other programs out there that would be a little bit less as far as an interest rate and a down payment. 30-year fixed rate loans typically carry the highest interest rate as compared to a 15-year fixed, as compared to an ARM program. A lot of people tend to shy away from an adjustable rate mortgage because they don't want to deal with that possible adjustment of an interest rate. The credit union offers adjustable rate mortgages that are up to 10 years. So your rate stays fixed for the first 10 years. If you know you're only going to be in the home 3, 5, 7 years, an ARM loan might be a better option for you. So make sure your loan officer really knows everything that you're working towards, and they can help you look through all the loan products. They're the ones that are experts in your loan products, and they can find the one that's right for you. So there is an option between a full pre-approval or a pre-qualification, and a lot of times with lenders you'll hear both of those terms, so I just want to make sure that everyone is familiar and comfortable with them. So for a pre-approval, and that's the one we've been talking about, you are submitting all your standard credit documents. You go through that full approval process. So a true pre-approval can take a couple days to a week once you've submitted your paperwork, because an underwriter is evaluating your application. And then basically you are approved for the loan. And once you find your property, all you have to do is get the property appraised and have some title work done, and you're ready to go to closing. So if you do get a full pre-approval, it can speed the process along as well, which sellers really like because they want a fast closing. A pre-qualification is what a lot of lenders just will give out, and it's based solely on what you put on your application. So your application may go through an automated underwriting system, but basically it's whatever you've stated on the application gets run through an automated underwriting system, and the computer tells us whether or not you're approved. A pre-qualification is not as strong as a pre-approval because there's been no documentation collected and the underwriter has not actually looked at your application. Very often applications do get submitted, and then when the supporting documentation comes, things are a little bit off. So it's, the pre-approval is always stronger, and it would be the one that would really be encouraged. Okay. The other tips when you're getting ready to buy a home, stay consistent in your job. So, well, consistency is just going to be the key through the home buying process. So you want to make sure you're staying consistent with your job. You want to make sure you don't make any major purchases on your credit after you've applied for a home loan. So a lot of times people get really excited. They've got a contract for their home, and now they're going out and they're going to buy new appliances, and they want to buy furniture, and they want to get new drapes and curtains, and they start putting it all on their credit cards. Every lender out there will check your credit again just before closing to make sure there has been no material change in your credit. So what you don't want to have happen is when that last credit check occurs, that you have put all of this stuff on your credit card and now you don't qualify for your mortgage because you've bought appliances. Make sure you're staying current on all of your obligations. Pay at least the minimum on time on all of your credit cards. Don't get laxed about any of your payments. And then make sure you protect that closing cost money. Keep in mind that that money has to be brought to your settlement when you buy your home. So, you're going to give the lender a bank statement showing that you have the money set to the side. But again, don't get so, wrapped up in the excitement of buying the home where you're like, okay, I'll just take a little bit out of this account and I'll be able to put it back. Really protect that closing cost money. And then avoid opening any new credit cards or getting a new loan. Because again, every lender is going to look at your credit again right before settlement, and you don't want to have any material changes to your credit that could then impact your home loan. That's the presentation. I'm going to see if I can stop sharing and get back to see what questions are out there. So give me 1 second here.
Let me remind everyone that you can ask your questions by unmuting your microphone, and after you're done asking your question, you can set yourself back on mute, or you can also submit the questions through the chat box.
Okay. So I do see one question in the chat box. It says, what's the best type of loan if I can afford a 20% down payment? So with the 20% down payment, really, all of these loan choices are still available to you. A conventional loan is going to be, that's where we would sort of encourage you to look. So a 30-year fixed, a 15-year fixed, depending on your payment, what you can afford with your income. The biggest thing is once you do have a 20% down payment, then there is never any mortgage insurance involved. And you don't need to get a second trust either. So that would be it with the 20%. I know I've mentioned the term mortgage insurance a couple times. I just want to make sure everybody is familiar with that term. People hear the word insurance and they immediately think of homeowners insurance, right? They immediately think it's something that protects them. Mortgage insurance is insurance that the lender takes out to protect actually the lender in case of default and the loan is not paid. So anytime you put less than 20% down, those loans are just considered riskier. So the lender is going to want to see mortgage insurance that protects them in case of default. So that's why a lot of people are just adamantly opposed. They don't want to pay mortgage insurance because why should I pay $150, $200 a month just in case I stop paying, right? So a lot of people try to avoid that mortgage insurance at all costs. And one way to do that is to structure like we do in the zero down program, where you have the two different loans, and that's a way to avoid mortgage insurance. I believe the slides are going to be out on this website. And the max amount of the loan for the zero down program, we do the zero down program up to $1 million purchase price. So closing costs. So closing costs, when we go back over and we look at there's the 5 types of closing costs. your lender, there's lender fees, right? So there's going to be a cost for the appraisal, credit report. Your lender may charge an application fee, things like that. So you really do want to shop around lenders to get a lender with the lowest lender fees. After the lender fees, everything really is sort of out of the lender's control. You're going to have a title company that's going to handle the settlement, and the title company is going to charge fees. So the title companies can have fees that vary between them. Your prepaids and your escrow, that's driven solely by the type of house you're going to buy and the price of the house. When we're setting up that escrow account, we're going to make sure that the lender has enough money to pay the tax bill when it comes due. So if you purchase a home and the annual taxes are higher between one home or another, your escrows are going to be higher when taxes are higher. So as far as being able to negotiate closing costs, it really comes down to shopping for a lender that has closing, lender fees that you're comfortable with, or the lowest lender fees, and then also looking at title companies and finding a title company that has fees that you're comfortable with. So let's see, the areas to look for a house. I'm not sure about that one. For the programs out there, you can go to the VHTA website, you can go to the HUD website, you can go to a couple other websites there to look at grant programs. For the credit union, we lend in all 50 states, so you have to be able to be eligible to be a member of our credit union, but we can assist people buying homes once you're a member in all 50 states. Other lenders would be able to go in all 50 states as well. Our zero down program is only available in Maryland, DC, and Virginia. So if you want to do the no down payment loan with us, it's only for properties located in Maryland, DC, and Virginia. Let's see. Okay, so there's a question. It says housing prices are very expensive in Arlington, and so many of the homes are older. Does the bank require an inspection appraisal, and will Arlington Federal Credit Union require the appraisal with zero down? Is it possible the bank will refuse to loan the monies? Okay, so we do require an appraisal on all of our zero down programs. Once the appraisal comes back, all the mortgage lenders out there are going to lend on the lesser of the appraised value or the sales price. So let's say you enter into a sales contract and you're going to buy a home for $400,000. The appraisal comes back and the appraisal says it's only worth $390,000. Then the maximum a lender is going to give you is the $390,000. So that's something to really take into consideration. Make sure you're talking with your real estate agent about. A lot of contracts can be written with what's called an appraisal contingency. What that means is if the property does not come back appraised at the sales price, then it's a way to terminate the contract without losing any money. We do see it sometimes where the appraisal comes back and it is lower than the sales price. Your options are to renegotiate with the seller and say, hey, I know we agreed this, but now I can only get that. Or you have to come up with the difference in your own money. So with the question, is it possible the bank will refuse to loan the monies? If the appraisal comes back lower than the sales price, the seller will not lower the sales price to meet the appraised value. And if the borrower doesn't have the funds to make up the difference in those two amounts, that is what happens to put the loan in jeopardy. As far as inspections, the appraisal is the only type of inspection that a lender is going to require. You as a buyer can work with your real estate agent to do a home inspection, which is different than an appraisal. A home inspection is where someone goes out and checks all the major appliances and looks at the roof and looks at the electrical and kind of gives you a summary of the working function within the home. The appraisal is looking at the structure of the home, how it compares to other properties around you. It is looking at the condition of the home, but not at the level of a home inspection. That's something you can work out with your realtor as well, as to whether or not a home inspection is a way to go. So there can also be contingencies in the contract that if a home inspection comes back showing too many things are wrong, that could be a way to get out of the contract as well. So, you know, inspections, any type of contingencies in your contract, that's something you really want to discuss with your realtor. Often when, you know, people come to us, and especially first-time home buyers, people that are just starting to think about the home buying process, we do encourage them to apply online through our website. We assign you with a loan officer. They go through everything. We can give you recommendations if you're not quite ready at this time to purchase a home, you know, how to get yourself set up and structured to be ready in the future. And then also, if you don't have a realtor that you're working with, but you're ready to get out there and you're qualifying for your loan, we do have several realtors in the area that we work with on a pretty consistent basis that take good care of our members, and we would be happy to recommend a realtor as well. Any other questions? Oh, thank you. There's a couple in there. Okay, the credit union is located off of Columbia Pike. It's in Falls Church. We have, that's our headquarters. It's 5666 Columbia Pike is where we're located. And then we also have a branch on Glebe Road. Yes, thank you. Contacting us with regard to real estate recommendations, we do have, you can email us at mortgages@arlingtoncu.org, and a loan officer will get back to you. Okay, a parent co-signing on a loan, you can have a co-signer on the loan. So if you don't quite meet the qualification factors on your own, then you can have a parent co-sign with you. Your parents would go on the loan. They would have their credit pulled. They would have to submit their income asset documentation. They are just considered a borrower. The pre-approval can be completed online. It would start by filling out the application online. We would pull your credit. A loan officer would talk with you and then gather just a couple documents. If you want a pre-qualification, that's something that we can get to you very quickly. If you want the full pre-approval, that takes a little bit longer because we do ask an underwriter to look at your file first. Okay, so again, if you have questions specifically for Arlington, mortgages@arlingtoncu.org. Retirement income, so there's a question, does the parent have to have wages, or is retirement income enough? Retirement income is enough. Well, retirement income is an acceptable type of income, so they don't have to, we're going to look at, when we're talking about income, we're talking about, your full-time job, a part-time job. It can be Social Security income, disability income, if you're getting a pension. So there's multiple different types of income that we can take a look at when we're qualifying you for a home loan. And again, on our website, which is arlingtoncu.org, if you navigate to the mortgage pages, there is a checklist out there. There's a document that kind of lays out the steps to the mortgage process. There's also a glossary of terms, like if you're you're starting your home journey and you're hearing some phrases and you're not quite understanding them, there is a glossary out there. There's the document checklist, and there's some tips for going through the process. So there's a question that came in that says, do people usually do pre-approvals from multiple financing agencies and compare them? So we do always encourage people to shop around. A lot of times, when you're looking to buy a home, you're looking to get a mortgage, you will go around and talk with several lenders. So I would encourage that, depending on what lender you go to. Again, there might be variations in the products that you would qualify for that lenders. There might be a variation in cost, a variation in the rate that they can offer you. So I would encourage everyone to get a couple different quotes and then go with the lender that's best with them. Some people, you know, it's all about your preferences as well. Some people want to know that the people they're working with are local, right? So if there's a problem, they can walk in and they can talk with somebody face to face. Some people don't really care about that. They're happy with an internet bank and they never actually talk with a human, or it's, you know, sometimes it can be very difficult to get a hold of somebody. It just depends on what, you know, what you're comfortable with. All right, I'm not seeing any more questions come into the chat. I really appreciate everybody taking time out of their day this morning, especially on Halloween, to come and listen about some home loans. I hope that it was informative. Again, the slides will be out there. We have more information on our website. We do have loan officers that are, you know, ready to chat with everybody and help people get started on their journey. So it's mortgages@arlingtoncu.org, and then the information on our website is just arlingtoncu.org.
Thank you, Catherine. I hope everybody can hear me here. And go to the exhibit hall where she has her landing page too, and you can get all that information there. So thank you, everyone.
Thank you.